Imagine waking up in early 2026 to headlines that the US dollar has lost its reserve status overnight. It sounds like a dystopian thriller, but the economic fault lines are already fracturing beneath our feet. For nearly 8 decades, the greenback has been the undisputed king of global trade, backed by nothing but faith and a fading geopolitical dominance. However, as the national debt spirals past unsustainable thresholds and the petrodollar agreement dissolves into history, that faith is evaporating. We are standing on the precipice of a monetary reset that will redefine wealth for the next century. Today, we reveal the 3 specific assets that will survive the storm, while traditional paper. The year 2026 represents a critical convergence of cycles. Across the globe, the BRICS nations are aggressively engineering an alternative financial system to bypass the SWIFT network entirely. This isn't just a political stunt, it is a systemic rejection of American fiscal hegemony. When foreign central banks stop buying treasuries and start dumping their dollar reserves, the surplus currency flows back to the United States, triggering hyperinflationary pressures we haven't seen in generations. This shift marks the end of the unipolar world and the beginning of a chaotic transition. Understanding this geopolitical chessboard is the first step in protecting your family's future. Domestically, the math is becoming impossible to ignore. Interest payments on the massive U.S. national debt have now surpassed the entire defense budget, creating a mathematical black hole. To stay solvent, the Federal Reserve has only one tool left: the printing press. This infinite debasement of the currency acts as a hidden tax, eroding the purchasing power of every dollar you have worked to save. History shows that every fiat currency eventually returns to its intrinsic value of 0. By 2026, the velocity of money could accelerate as people realize the paper in their wallets is melting. We are entering the great devaluation, where the only way to win is to stop playing the dollar's game by switching to hard money.
The first pillar of your 2026 survival strategy is physical gold. For 5 millennia, gold has been the ultimate arbiter of value, surviving every empire, plague, and war in human history. Unlike a digital entry in a bank's ledger, gold has no counterparty risk. It does not require a government's promise to be valuable. In a scenario where the US dollar fails, gold becomes the universal language of trade. It is the only asset that cannot be printed, hacked, or wished into existence by a central committee. Holding physical bullion, not just paper gold ETFs, provides a tangible insurance policy against the total collapse of the digital financial infrastructure that governs our daily lives today. Look at what the world's most powerful institutions are doing, rather than what they are saying. Central banks are currently accumulating gold at the fastest pace since the 1960s. They are quietly preparing for a post-dollar world while telling the public that everything is under control. This great gold rush is a clear signal that the insiders know the current system is terminal. By securing a private reserve of gold now, you are front-running the very institutions that manage the global economy. As the supply of dollars increases exponentially, the fixed supply of gold acts as a gravitational constant, ensuring that your labor today will still hold its relative value in a volatile tomorrow. Follow the smart money before it is too late. As we transition deeper into the 21st century, a new contender has emerged to challenge the old guard of finance. While gold is the analog hedge, Bitcoin has become the digital fortress. This isn't about speculative gambling. It is about the discovery of absolute mathematical scarcity. For the first time in history, we have an asset that is completely decentralized and immune to the whims of corrupt politicians. As the dollar fails, the world will search for a transparent, borderless ledger that cannot be manipulated. Bitcoin offers a parallel financial system that operates 24/7, independent of the legacy banking architecture. It is the ultimate escape pod for. Why is Bitcoin the second essential asset for 2026? It comes down to the code. With a hard cap of 21 million coins, Bitcoin is the antithesis of the infinite dollar. In a hyperinflationary environment, assets with fixed supplies tend to absorb the excess liquidity like a sponge. Furthermore, Bitcoin's censorship-resistant nature means your wealth cannot be frozen or confiscated by a desperate government facing a fiscal crisis.
It is the first truly global private money that allows for the instant transfer of value across borders without a middleman. As the traditional system buckles under the weight of its own debt, Bitcoin stands as a beacon of sovereign ownership for the individual investor who demands free. The synergy between gold and Bitcoin creates a dual-layered defense. Gold provides the physical stability of the past, while Bitcoin provides the technological utility of the future. By 2026, the halving cycles and institutional adoption via spot ETFs will likely have squeezed the available supply of Bitcoin to extreme levels. When the dollar's purchasing power drops, these hard assets will likely experience a parabolic revaluation. It is not that gold and Bitcoin are necessarily going up in price, it is that the currency they are measured in is falling towards zero. You must view these not as investments for profit, but as lifeboats for the preservation of your actual wealth and standard of living in a post-fiat era. The third and perhaps most overlooked asset for a 2026 crash is productive real estate, specifically arable farmland or resource-rich land. When the financial system resets, the most basic human needs, food, water, and shelter, become the most valuable commodities. Paper assets can be deleted and currencies can be devalued, but a plot of land that produces a yield is a permanent asset. This is why billionaires like Bill Gates have become the largest private owners of U.S. farmland. In a world of digital chaos, the ability to produce something tangible provides a secondary layer of security and bartering power. Land is the ultimate real asset that provides both utility and a hedge. Surviving 2026 requires more than just buying assets. It requires a strategic rebalancing of your entire portfolio. The era of the traditional 60-40 stock and bond split is dead because bonds offer no protection when the currency itself is dying. To thrive, you must shift towards a hard asset weighting. Imagine a triangle of protection. One corner is the physical security of gold, the second is the digital mobility of Bitcoin, and the third is the tangible productivity of land. This diversification ensures that no matter how the dollar fails, whether through a slow grind or a sudden shock, you have multiple avenues of survival. Positioning yourself now while liquidity still exists is the only way to guarantee it. The greatest challenge you will face during a 2026 market crash isn't financial, it is psychological. When the headlines scream of bank runs and the mainstream media pushes panic, most people will make emotional decisions that wipe them out. The masses will sell their hard assets at the bottom to chase failing paper promises. You must maintain the conviction that value is found in scarcity, not in government decrees. Staying calm while the world's reserve currency fractures requires a deep understanding of monetary history. By recognizing the patterns of the past, you can view the coming volatility as a predictable transition rather than an unforeseen catastrophe. Preparation is the only antidote. As we look toward 2026, the choice is clear. You can remain anchored to a sinking ship of fiat currency, or you can board the lifeboats of bold, Bitcoin, and productive land. The window to exit the traditional system is closing as geopolitical tensions rise and debt levels explode. This isn't just a financial forecast, it is a call for personal sovereignty. Research these assets, secure your private keys, and hold physical custody of your wealth. Those who act before the panic will be the ones who define the new economy on the other side. The future belongs to the prepared. Ensure that when the dollar fails, your legacy remains unbreakable. The clock is ticking toward 2020.